Hello students. Today we're going to be talking about the worksheet. I was a little hesitant to prepare a video on the worksheet because, as you can see, it's very difficult to get this much information on the board, but I did manage to do so, and that's what we're going to cover today. The worksheet is a tool which is used to put all the information together in one place that you need to prepare the financial statements, and it's real helpful because you can do this before the accounts are actually adjusted and closed, and go ahead and get your financial statements prepared. The way that we start the worksheet is to start with a trial balance, which can also be called an unadjusted trial balance, and that's what we've done here. The numbers are going to be small to keep this simple, but the first thing we do is prepare the trial balance, listing your account titles and listing your debit and credit balances from your ledger. Now this also can be called an unadjusted trial balance because the accounts have not yet been adjusted. Okay, you also want to make sure before you go forward that your debits and credits equal in your trial balance columns, which they do. The next thing we want to do is put in the adjustments. Now I find it easier to go ahead and journalize the adjustments, put them in the journal before I actually put them on the worksheet, and you might find that to be easier as well. So if that's the case, go ahead and put them in the journal because you're going to have to do that anyway at some point. But we're going to go through the adjustments that we have here. I actually took this problem from the textbook, made some minor modifications so that I could get it up on the board. So I'm going to read the information that I have here. The first adjustment we have is fees earned but not yet billed, $9. Now we know that that would be a debit to accounts receivable and a credit to fees earned, so we're going to put that in. You're going to put it in the column under the adjustment column, either the debit or credit that would apply. So we're going to be debiting accounts receivable, debit column under the adjustments, $9, and we'll be crediting fees earned, adjustments, credit, $9. So that's that first entry. Okay. The second one, supplies on hand, $3. We see that we have $8 in supplies. If we have $3 on hand, then we know that we've used $5. So our entry would be a debit to supplies expense and a credit to supplies of $5. So let's look at supplies expense, debit $5, supplies, credit $5. Okay, so that's the second entry. The next one is insurance premiums expired, $8. Now keep in mind, this is telling you what has expired. Some of your problems might say unexpired insurance is a certain amount, and if that's the case, then you have to adjust backwards like we did with supplies to find out what's been used or expired. Expired means used, unexpired means what's left. In this case, we have the amount that has been used, so it's going to be a debit to insurance expense and a credit to prepaid insurance for $8. So insurance expense, here we go, a debit of $8, prepaid insurance, a credit of $8 in the adjustments column. Okay? Okay, the next one is depreciation expense of $4. Okay, that's going to be a debit to depreciation expense and a credit to accumulated depreciation. So here's your depreciation expense debit. Accumulated depreciation, we only have one, and that's going to be a credit of $4 in the adjustments columns. Okay? And the very last entry is wages accrued but not paid, $1. That's going to be a debit to wages expense and a credit to wages payable. So let's find our wages expense. That's going to be a debit here, and wages payable is a credit of $1. Now what I didn't tell you, which I probably should mention, is that for each adjusting entry you probably should have a reference like a letter or a number to show both sides so that you can easily see what the entry is once you look at your worksheet. I simply just did not have room here, so I did not do it, but the first entry we had was this one, so that would be either an A and an A, or 1 and then B, C, D, whatever. And that's helpful when you're going back to try to trace the journal entries and see what has actually been done. Alright, now that we have the adjustments all up there, what we need to do is to add up the adjustment columns and make sure that they equal, and I have done that here, and they do equal. You want to make sure that every pair of columns does equal, and we'll talk about the ones at the end in just a few minutes because they don't. And then once you get your trial balance and your adjustment columns to balance, then what you're going to do is just simply move the amounts over, taking into consideration any adjustments that you have to get the adjusted trial balance column, adjusted trial balances in the adjusted trial balance column. So here we just simply move over the $12 because there were no adjustments. Then we add these two together. We have a new balance, a debit balance of 89. Here we have 8 minus 5 is 3. Here we have 12 minus 8 is 4, because see, you've got a debit credit. So you're going to make that adjustment as you go across. No change in accounts payable. Wages, we started with 0 plus a credit 1, so now we have 1. No change in capital. The drawing, no change. Fees earned, we had a credit, and we have a credit adjustment, so now we have 99 on the credit side. Wage expense, 20 plus 1 is 21 on the debit side. We have rent, 12 plus, no change, that would be 12 on the debit side. 8, 6, 5, 4, all on the debit side. And then we're going to add up those totals to make sure that those two columns equal as well. And they do, because now we have 212 on each side. Okay? Your adjusted trial balances should agree with the balances that you have in your ledger after the adjusting journal entries have been posted. All right, the next thing we're going to do on the worksheet is simply move the balances in the adjusted trial balance column over to the income statement or the balance sheet columns, depending on what type of account it is. Now, if you have listed your accounts in financial statement order, which is the proper order to list them in, that would be assets, liabilities, capital, drawing, revenue, and expense. Then you can see a distinct break here, which would be right after drawing, between the balance sheet accounts and the income statement accounts. However, when you're working with a worksheet, you may have to add some at the bottom, because when you pull your trial balance, it's not going to have all the balances in it. Now, this particular problem that I did take from the textbook did allow for that and put in the 0 balances, but in most cases you would have to add those at the bottom. So you might have some balance sheet accounts down here, such as wages payable. We had an entry related to that. Just make sure that you get those in the right column when you extend them. Okay? Okay, when we extend them, we're simply just going to move them over. So cash, accounts receivable, supplies, prepaid insurance, equipment, accumulated depreciation, even though it's a contra account and has a credit balance, it's still a balance sheet account. Accounts payable, wages payable, capital, and drawing all go over to the balance sheet. Just simply move those balances over. Then when we get to the income statement and all the expense accounts, we're going to move those balances over to the income statement columns. Okay? Now, I said that all of your debit and credit columns should equal. In this case, though, in the last two pairs of the worksheet, the totals will not equal, and they're not supposed to. Okay? But they will be off by the same amount. So you're going to add up your debits and your credits, which is what we've done here. Then you're going to take the difference between the debit and credit column and put that difference, or add back that difference to the lower amount, and force the worksheet to balance. That's basically what we're doing. Do that for the income statement and also for the balance sheet. So the difference between 99 and 56 is 43. The difference between 156 and 113 is 43. So that amount is the same, and when it is the same, you know your worksheet is in balance. Add it back, and now you have a balanced worksheet. Now what that amount represents is either net income or net loss. In this case, it's net income, and it is on the net income line. Okay? Now, there are a couple of ways you can tell that it's net income. In the first place, all of the credits here represent revenue, and all the debits represent expense. So if your credit side is larger than your debit side, you know you have net income. Another way to tell is that if your differences fall or added back on the two outside columns, then you know it's net income. If they fall in the two middle columns, then you know it's net loss. Okay? So this is the worksheet. It does give the information to us so that we can prepare the financial statements very easily. You have all your information here to prepare your income statement. and you have all the information here to prepare your balance sheet. But not only that, it also gives us the data, if we have not already journalized the adjusting entries, it gives us the data to put the information in the journal for the adjusting entries, but it also gives us the data we need to prepare and journalize the closing entries. Because all we have to do is look at, to do the first closing entry, which is to close all revenue accounts, all we have to do is look at all the amounts in the credit column, and we have one, and of course that account would be closed with a debit to income summary. Then the second closing entry we have is to close all expense accounts, so we look at the debit side of the income statement columns there, and we credit all of those accounts, and our debit would be to income summary. And you actually even have the totals that would go to income summary on the worksheet as well. Then of course the difference between the debit and credit balance and income summary would be the amount that you would close the income summary account to capital, and that amount is $43, so you even have that on here, okay? And then of course your last closing entry is to close drawing into capital. So not only does it help you prepare the financial statements, but it also helps you to prepare the adjusting and closing entries. I hope this is helpful. Let me know if you have any questions.